All right. I just want to say I am excited to get into today's, price action study. Here we are looking at the news drivers. So we had a medium impact and high impact at 10 a.m., which is the prelim UOM consumer sentiment and inflation expectations. All right, so that being said, we're going to go ahead and dive straight to the charts. All right, here we are. Let's go ahead and we're just going to do the complete top down, but I'm going to make it quick. And we're going to talk about biases, things playing out, etc. So, all right. For the monthly, as I mentioned, the expectation overall is that we're just currently trading to this order block. We had this large 3 months downwards, so now we're seeing a return to that order block before we continue lower. We have that range, of course, outlined on both, so that's what we're expecting on the monthly. Here on the weekly, let's go ahead for this. All right, same thing. So let's see if what I was saying on the monthly is true. Well, here we had this consolidation before this expansion move. So the last up close before the down move. Okay, we see that retraded to, and then we actually see price react off of that, and then we see institutional selling. Now we're seeing price currently come back up. So what is it coming back up to? Well, look no further than our weekly order block and monthly order block. The monthly order block is outlined by this red box, and the weekly order block is here marked with this line. So currently we're in a monthly order block, we're in a weekly order block, and so that confirms the idea on that. But also for our weekly candle, we are currently above all of these relative equal highs here, 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 and here. Okay, so those highs are obviously relative to each other. Same idea here for NQ. All right, with the order block being right here. This is the order block. Let's go here. Okay, let's go to the monthly. All right. So it's the same idea here with this, and then this is our order block. We are currently in that, and then here we go. So we are trading above this high. We'll go through that in a lower time frame, but we're just going for those relative equal highs, and that has been taken on both ES and S&P today. So overall, what are we expecting with the weekly? Well, we did close higher this week, and we closed into our order block. So what I'm anticipating next week is that price will continue lower. All right, if price continues trading past this order block, or if it trades past the 50%, then I am wrong, because that order block should not be violated. Like, it's fractal from our higher time frame and everything. So with my analysis from higher time frame moving down to the week, that should not be violated. But let's go ahead now and look on a more refined time frame, since we've refined both of those ideas. All right, so here we are on the daily chart on the S&P. All right, and then currently you can see exactly what I was mentioning, trading above that weekly order block, trading into the monthly order block noted by this red range. All right, and it's the same thing here. Now, we do have to talk about one other thing, which is the cracking correlation. So from here to here, okay, we can see that we have this lower high and this higher high. All right, and we do have that here as well. Okay, so you may be wondering, what I'm talking about here. What I'm talking about overall is the fact that we're showing weakness or a resistance to trade higher, but we did take buy side. Okay, so let me just do this. Okay, hold on. But these pairs are not moving the same. Okay, so here we go from this high to the close. All right, and this high to close. So I guess this isn't necessarily considered SMT. What I more or less should have done is just noted the fact that this was resistant while we still took buy side. This was showing a more aggressive push to the upside, so we'll go back on that a little bit. But anyways, what can we take away from the daily here? All right, these relative equal highs, all right, we've traded above them. Buy side liquidity taken. Retail traders that have their stops here, that liquidity has been taken. We also, here on the daily chart, filled in a liquidity void. All right, so we're above relative equal highs, filling a liquidity void in a monthly order block, in a weekly order block, a bullish order block, that is. And so this, in other words, what you're seeing here on NQ is that all liquidity has been exhausted. I mean, there is one other thing, which is these relative equal highs here. But this move, or these relative equal highs that formed, were just a result of trading back into an order block, which you can see here. This consolidation, all right, trades back into it here, that order block before the down move. So in a bear structure, right, we're expecting it to trade back here. It did. We're in that order block. All right, now it's a little bit different for NQ. Why is my chart being slow? All right, just give it a second here. Bro, come on now. Why is it doing that? All right, I guess I'm just gonna have to refresh the chart. Come on. So annoying. Crappy internet. All right. So anyways, back to my train of thought. So why is it different for S&P? Well, the fact is for S&P, we still do have this liquidity void up here. We didn't see again that same aggressive run as we did. Now, that said, we are above these bodies. We are in the weekly order block. We are in the monthly order block still. And even though there is still a liquidity void here or inefficient price action, we can expect price to trade to that before it goes lower, but it's not a requirement because our underlying structure is currently bearish for higher time frames. So we'll see, what it wants to do. But next week, I am overall expecting lower prices. So we're going to focus on that. But I would not be entering like any buys here if I was trading. And the very same thing here for NQ. So now that we've refined a lot of those ideas on the higher time frame, we can now start going to our lower time frames, if you will. And let's just look at that more refined again. So here we are, consolidation, all right, and then last up close before the down move. Okay, here we go. That's violated, and now we're currently trading in that order block and back into that order block. We're actually directly at like the 50% mark if you mark this high, because on a higher time frame, that's going to be an entire candle. But nonetheless, we're in that order block. We're also in the liquidity void up here, so we're seeing price trade back to that. And we know that liquidity voids go hand in hand with retracement. Reversals go hand in hand with liquidity pools, which are these relative equal highs. So think about that. Is there really any reason for us to expect any of these to go higher? I mean, we can expect this, as high as this is going to go, is to this void here to rebalance that. It shouldn't go any higher than, that weekly order block. And it shouldn't go any higher than the 50% mark. What you'll notice is this inefficiency from here, right? All this that hasn't been traded, okay? What you'll notice is that's about the 50% of the order block. So again, we didn't see it trade as aggressively. It's very likely that it's going to trade there, in my personal opinion. But, all right, one thing that I will mention, last week I said sell, sell, sell. Only reason I said that I was picking highs. I did have the right idea, and we'll talk about the weekly range here in just a moment. But the only reason that was necessarily wrong is because we had not traded above those prior relative equal highs, and I wasn't looking at liquidity effectively. So the day after that, I then mentioned these objectives and then held on to that, expecting price to trade to these higher highs and fill in these liquidity voids before continuing higher. Okay, so here we are. Let's go to 1 hour. Oh, that's because I'm on the wrong chart. That's why. Okay. So I did most of my analysis on the wrong chart. I did it on my institutional chart, but that's okay. Because it's the same thing. So here we are. All right. So weekly range. All right, so we use the hourly to look at the weekly range. What really have we done all week? We've been consolidating all week since Monday, creating these relative equal lows. Relative low to this low is relative to this one, just slightly higher. And then here on Thursday, we have this relative low created. So we know that this is a form of accumulation. Large entities or smart money is tricking people into entering on both sides of the market. Okay, you have people who see this here. Oh yeah, look, what did I say yesterday? Retail resistance. Yeah, this is retail resistance right here. Oh yeah, price is gonna, bounce it. Oh, it's breaking out. So now this is a breakout of resistance. So now the trend is gonna continue higher, right? And not even looking at like what price is actually gonna do. So this now we've taken those buy stops. Every retail trader that put their stop here, anywhere here, all these levels, okay, that liquidity has been taken from the marketplace. And of course it got absolutely demolished here, okay, on NQ. And the reason for that is, and something I've noticed here, so NQ moved from 15609 to 15209, so about 400 pips, just roughly, while ES moved from 4451.75 to 4356.00. And so that's only about 100 pips in movement there. So just something I wanted to note as well. That's one of the Kraken correlation is me seeing that aggressive movement on NQ that I don't necessarily see on ES. Not that it's relevant, of course, in like these highs, because we are not seeing weakness, not even here on these lower time frames. But anyways, let me not ramble too much. Listen, relative equal lows created all week. Last week's price action, aggressive movement to the upside, large funds moving it. This is institutional sponsorship. These large banks are driving price exactly to where we're expecting, which is a previous order block and previous levels of buy side liquidity that have now been taken. So let's go now onto the 15-minute, which is the very last one that I'm going to go on. And then I'm going to wrap up what my thoughts are for the week and what I'm anticipating next week. Okay. So, here we go. All right. So here's that weekly range, a little more, refined, where you can see those relative equal lows, low here, low here, low here, low here, low here. All right, and then, for most of the week, we are seeing higher highs with the exception of yesterday, which had to wipe out the sell side from earlier on in the week. Now, I didn't say this for ES, I said this for NQ, but I did mention yesterday how the only reason price was trading back here was to trade to an order block before continuing higher. And so that's why this just feels so great. I knew, and I mentioned in my last video, that price was going to make a more aggressive movement after we traded to that order block. So we get to that order block. Let me see if I still even have it. Well, that would probably be on the other time frame or the other chart. But we'll look at it in a minute. I'll see if I still have the drawing on and everything. And for the S&P, okay, I mentioned how, we had taken, all the previous lows from the week. So we had purged, those sell stops, and everyone who had their stop here, okay, they got taken out. All right. And now today, we again had traded on NQ to that order block. So one last thing here. Let's go back. Just gonna look. Oh yeah, this would be on our institutional chart. We'll do two other things. Sorry. All right, so let's go here. Here we go. And here and here. That's I forgot. He used the 90 minute. So I was also explaining like the interest triad. Okay, so one of the things I talked about yesterday is the fact that these three different bond markets should move in correlation. And so here we are on the 5-year. See a lower high. Okay, but on this is the 30-year, we see a higher high. But here we see a lower high. So this is accumulation, all right, that we're seeing here. This is a manipulation, all right, while here and here we're seeing these lower highs. And so here's the thing. If interest markets, again, are going to be going lower, okay, then that we know that the US dollar is going to go higher. And that's what we're seeing as well. Pair that with this void up here, just complete volume imbalance right here on the US dollar. Pair those ideas together, and then let's go to I'm sorry, let me just rephrase this. With us expecting interest rates to go lower, or with us seeing that weakness in two out of the three pairs, while one we show a accumulation above a previous high, we're seeing the US dollar want to trade higher, and oppositionally opposed to the US dollar is our futures market. Okay, so this, let me put it to the midway point here, complete opposite. Okay, we can see that these move opposite. So now with the interest rate analysis, okay, this just confirms what I already know, which is that we're going to see lower prices next week. So mark my words here. Mark my words. Liquidity has been exhausted. Okay, if I'm right, we will not see price continue trading higher than those order blocks. Okay. Additionally, one thing ICT mentioned that I'm just noticing now that just came to mind. Okay, when you're in that monthly range in the halfway mark, let's do, I need to re-outline it. I don't know why I deleted it off my other chart. When you're in that halfway mark, all right, he also mentioned that it will consolidate and you can expect a return back to your previous order block. And so that's what I am anticipating as well. But again, multiple reasons other than just that. Okay, and let's go. I'm going to refine this and then we're going to close it out. So I haven't marked it since. Or did I? Oh, that's why. That's why. Okay, yeah, I remember why. So we'll just go with for the range instead. Because I didn't mark a range here like I did originally. And then I didn't because of the wicks. Because for the monthly candle, it's just so large. But I'm still going to mark the actual high and not the close. And that's what he said to do. So come to think, I don't know why I didn't have it marked. Anyways, I digress. Okay, here we go. Currently above the monthly range here on NQ. All right, so we'd reasonably be expecting lower prices. And if we want to talk about discount premium as well, all right, let's go. So we're going to do that on a higher time frame. All right, and this will take 2 seconds. Okay, cool. If we measure this high, you know what, let me just do it. Let me just do it. On the monthly chart, measuring from here to here, and of course my friend, he has the black. All right, let me just go here. Okay, boom. We are in optimal trade entry. All right, let's see if that's the same for on this low to this high. We are also in optimal trade entry here, and we're actually slightly above it. Well, we were above it. I forget each of these candles represents a week, and then we are, as soon as we traded above optimal trade entry, now we're seeing aggressive movement, and it's no different. Now we can continue to refine this on lower time frames, but just understand as well, we're in higher time frame premium, and that's also part of the reason that I'm expecting lower prices as well. So we're gonna wrap it off here, and man, I gotta say, man, I'm fucking excited to see what's in store for next week, bro. Like, just seeing you know, if my expectations play out, and yeah, leave it at that.